And that was the real thing for me, Jason, that I didn't realize the amount of responsibility that I had helping other people, other contractors. We kind of look at them as not necessarily as almost like a debt on the books, but really they're part of your team. And
Yeah.
if you build these positive relationships, you want to have good relationships with those people. So when that axis tightens, everything starts to feel different. The question becomes, how long can I maintain control to see this good asset through? Because I could be asset rich and cash poor, and those walls would have been still down. Project never would have been, finished on time, let alone early. It was able to finish early for once, because
Wow.
again, I was the only one in town. Welcome to another episode of WealthWise Banking. I'm here today with my co-host, Jason Sipple. How's it going, man?
Jeremy Lee Huggins, it is going phenomenal. It's going phenomenal. I am excited to be back together with you. You are starting to experience Florida at its finest. How do you feel about the heat down here, brother?
I grew up in Florida. I knew it was coming.
You forget
Yeah,
how hot it is, don't you?
I mean, Georgia's hot. Florida's something else.
And I'm usually cold. I mean, people say it to me all the time, but I'm usually cold because everywhere you go is air conditioned, right? So you're in the heat, it's sticky hot, and then you're cold again. But anyhow, let's jump in. We're not here to talk about the weather. What are we here to talk about today, Jeremy?
So today's episode was actually inspired by a couple of recent interviews and calls that I've had with some folks. What's great about being in mine and Jason's position is we talk with everyone who has literally a massive portfolio of real estate and millions of dollars to their name, all the way down to the person who's filed for bankruptcy and just trying to figure out what's the next step, right?
Yeah.
And because we have this access to people and their stories and their history, we're able to bring it to you guys and kind of really it's almost like a cheat code in our personal lives. We're able to, learn from other folks, like what's doing well and what's not doing well. And we keep finding is the ability to finance things in life and the ability to need for access and control and liquidity. That's where I had a conversation with a multimillionaire recently, right? Because guess what? You can actually be worth millions of dollars and still panic when you don't have access to money. And I know that sounds ridiculous, right? But it does happen because you may have a solid investment property, right? You may have a good business model. There may be market demand for what it is that you're selling, and you may have an investment that makes sense, but your money is tied up. You're not
Yeah.
asking yourself whether or not this is a good idea. What you do is you find yourself asking, where do I get the cash now? That's not a rich person problem. That is a people problem.
Yes. Yes, it's more common than you think too, right? You see all these people and you see them in their big houses and their beautiful cars and their fancy watches and clothes, and you think, wow, that person's successful. When you really start to get to know those people, Jeremy, like we're talking about right now, what do we find out more often than not?
They're
Like,
very asset rich and cash poor. That's what's going on. And so today, that's what we're going to be talking about. We're going to talk about why good investments can still trap smart people when they don't have access built into their plan. That's what we're going to be discussing today.
that's a powerful one. So, again, people assume that wealth means access. You feel like when you see someone that's wealthy or you talk to someone's wealthy, man, they got it all figured out. Jeremy, this is the part that people get wrong. When they see someone with the assets, the watches, the cars, they assume that they have cash. They assume that they have money. So kind of talk to us about what you found out in that call and what that really looks like.
Yeah, so and just keep in mind, like if you're not here and you don't already have assets, like learn from these people as well, because there's no point in repeating their mistakes. If you're not in a position where you say, "Hey, I don't have rentals, I don't have assets yet, but I want to be," if that's you, then I still want you to tune in because this particular person has property, right? They have equity, they own a business, they're invested in private deals, they have, from the outside, all intents and purposes, they're looking strong. But that doesn't mean they can actually wire money by the end of the week. That's part of their pain. So if a repair bill, as an example, a repair bill, it really doesn't care about what your net worth is. And a lender doesn't care about what a property is going to be worth in 2 years. If you're responsible for payroll, payroll doesn't care whether or not a deal returned the money, right? And a seller with a great opportunity isn't necessarily going to wait just for you to get money from somewhere else. So the question really starts becoming simple. What can you actually access without damaging the rest of your plan? That is where the asset rich and cash poor statement comes from.
And a question for you thinking about this is if cash had to move this month, would your net worth actually help? And Jeremy, before we go into the next segment of this, for those that are building, right? Like say you're not in this position that this gentleman was in yet. learn, like Jeremy said, from him, learn, like Jeremy said something to me too earlier on a brief phone conversation we had, Tio Jeremy, where we're talking about structure. The longer we do this, Jeremy, the more episodes we do, it gets simpler because it's about structure and control
Mhm.
and protection, right? Those are like the main things that come up. So structure first is what we're talking about.
Structure before stress. That's what I told you.
Yeah.
Structure before stress.
I knew there was more to it, but I didn't remember.
Yeah. But, and you can provide structure, right? And you want to have it there before stress because a strong asset, just in and of itself, a strong asset can actually become stressful if the timing turns against you. And that's what I think a lot of people miss. They assume that stress means, oh, the investment was bad. Guess what? We can identify bad investments. We know when the market goes wrong, right?
Yeah.
But what if the investment is good? What if the property is still good? What if the business is growing? What if the private deal may still pay out, right? Tax strategy, in and of itself, tax strategy takes time to implement. The problem for a lot of people is timing. The asset needs time.
Mm.
Life needs cash. Life needs cash today.
Yeah.
Don't think about the thing like, oh, this is going to be a great investment 3, 5 years from now. What happens if you need cash 3, 5 weeks from now? Think
Mm.
about that. What if you need cash by the end of this week? The
What?
asset needs time, but
Yeah.
life needs cash.
What an interesting flip of what we teach. Right? The first principle we're teaching everyone is thinking long range. Like start with the end in mind. That's really what we're talking about week in and week out. But this time, what I just heard you say, Jeremy, is while you're looking and you're thinking long term, what it's going to mean in 3, 5, 20 years, this asset that you now have, right? Like, it's always about the trade-offs. What are the positives, the pros in this? But now you're bringing up a great point. Well, what happens when the one guarantee in life happens in the next year, 2 years before we hit when this asset's really going to be worth what you're hoping it's going to be worth, right?
Yeah, so I'll make a pilot analogy here because I am a pilot. So let me try to make it simple,
What?
right?
Why don't you
Yeah.
start flying?
Good.
Just kidding, man.
So good assets, as we know, good assets like what we're describing here, they need more runway. So what does that mean? All right. When you have a plane, a small plane, small assets, small money movements, okay? It doesn't need as much time to grow and develop when you're making these kind of daily changes. A pilot needs a shorter runway when they're operating a small plane. That means there's less, room for takeoff, less need for to build up speed. It also means they don't need as much time to actually abort the decision. When you have a large airplane, though, when you have a large airplane, it needs more runway. There's more
Mm,
cargo, there's more decisions. Guess what? It also needs more time to stop, to abort if something catastrophically goes wrong. The problem is with the large airplane is that everything's happening faster. You need more runway. You're still trying to make the same decision, but you have less time actually. So one is using a smaller plane, less distance to build up speed,
hmm
more room to stop. You have more margin if the condition changes. The assets work the exact same way. Real estate needs time to appreciate. Businesses need time to grow. Developments need time to finish, right? Private deals need full time to go full cycle. So a deal that could happen in the next 3 years or so could be really painful, to my point, if you need cash in the next 3 weeks. The
Yeah.
issue here isn't whether or not the deal is good. We know the deal is good. I said you can identify a bad deal. The issue here is whether or not you can stay in the deal long enough for it to actually work, to come to fruition, to give you the dividends, the payout that you're expecting.
And here's another part that you didn't mention with the larger plane, right? The larger plane is also carrying more responsibility with it, most likely, right?
Mhm.
You got more passengers, you got more things, you got more to be responsible for.
More
And
people are relying on you.
that's exactly right. That's exactly what I was thinking. With the smaller plane, maybe it's you, maybe it's someone with you, right? But with the larger plane, you got more people relying on you. There's more things that you're responsible for. And so again, it comes back to that question of can you stay in control long enough for this to work?
Mhm. Yeah, so let me bring it to a personal story here. All right. Is that all right?
Yep. No, no, not today. Not today. Everybody
Not
vote on
today.
it. Yeah. Okay. Okay. Wait. And I actually, let me introduce this personal story because I've had the privilege of being to what you're going to talk about. And I've shown it to other people. And it's a beautiful place right in downtown Savannah. And this is something that happened, for you, it happened during COVID with a renovation. And so I've seen the result, I've seen the end and it was amazing. But how was it really when it was happening?
Yeah, so I bought this investment property in historic Savannah, Georgia. Beautiful place, love it. The problem was is that I bought it and I had a six-figure renovation plan, and I already knew the numbers. I knew what the refinance, I knew what the market rents and stuff were going to be. I had my budget, I did my whole spreadsheet thing that I do. The problem was is that life threw me a curveball, a little curveball, a small one called COVID, right? So I'm in the middle of this six-figure renovation. The walls are down. I already knew what the kitchen was going to be like. I knew
Yeah.
what the floors and stuff were going to be like. But I have a contractor coming in asking me, "Hey, Jeremy, are we good?" Right? I knew the project made sense. I knew what the numbers were going to be. I knew that this was a good investment. But this happened at a time when flights were canceling, entire cities were shutting down, banks stopped lending, banks actually shut down lines of credit. I had friends, other investors being affected by this because private money lenders said, "Hey, no, not continuing with your deal, not continuing, putting money out because I don't know if I'm going to get it back. I don't know what the refinance is going to look like." Nobody knew what the next week was going to look like, let alone the next month, 2 months, next year. You guys remember that? Do you remember COVID and the amount of uncertainty that was in the world at that time? If you were in the middle, if you were investing during then, if you had money in the markets, like it was a really stressful time that we had. And that moment, it taught me something. The question wasn't whether or not the investment was good. It was going back to it. Did I have enough control of the situation to actually see it through? Did I have control to get the project done, to pay the guys? Because to your point that you made earlier, this was a larger airplane. I was actually
Yeah.
responsible for other people. Those contractors, you know why David came and asked me, "Hey, are we good?" Because they had bills to pay, they had obligations, they had responsibilities. And the other investors in the community were shutting down their projects. They eventually started them up again. But at that time, they had shut down. I was the only one in my nucleus that was actually continuing. So I was trying to finish my project, but I also picked up the added responsibility of supporting other people with families and decisions and bills. So by continuing, because I had that ability to respond during times of stress and chaos and uncertainty, I was able to get my project done. I was able to get my project done, completed on time. We were able to go through the refinance. I was able to help other people. And that was the real thing for me, Jason, that I didn't realize the amount of responsibility that I had helping other people, other contractors. We kind of look at them as not necessarily as almost like a debt on the books, but really they're part of your team. And
Yeah.
if you build these positive relationships, you want to have good relationships with those people. So when that axis tightens, everything starts to feel different. The question becomes, how long can I maintain control to see this good asset through? Because I could be asset rich and cash poor, and those walls would have been still down. Project never would have been, finished on time, let alone early. It was able to finish early for once, because
Wow.
again, I was the only one in town.
Yeah. Wow. And then I guess let's go into how you were able to do that. I know we're gonna, like with the pain that you felt with that moment, remember how much uncertainty you had in your life in that moment. I remember being scared. I mean, I lived in the greatest country in the world, Jeremy. Like I was here in Florida. Things weren't necessarily all shut down, right? Like, but it was still, I remember personally being afraid, and that's not something that's normal for me. I remember going on a bike ride and being worried that people were out. Like you didn't know it was going to happen. So the fact that you were able to keep this project with these beautiful, historically accurate windows, right? That's the thing I point out of this property. They're beautiful. But how are you able to do that? Like let's dive into that a little bit. Like how did you make sure that you had control and you're able to keep things moving?
So we have this saying in the military that you prepare for war during times of peace.
Mm,
That's what I did is I laid the groundwork and I created living capital before I needed it. So I reinvested it to myself. I created control. I created optionality. I created honestly peace of mind is what I did. And I did that through funding a properly engineered life insurance policy. Why? Because it was a contract between me, private citizen, and them, private institution. It predates the IRS. So I have access, control, and liquidity. I had the protection piece at a time when people thought this was going to be a massive plague and everyone would die. That protection piece actually really mattered as well, didn't it? But
yes.
I also built control and liquidity that allowed me to continue seeing the project through. That's what I did is I prepared ahead of time before I actually needed it.
And that's the power of what we're talking about today, right? This is what power of how we get to see the patterns and we'll call them problems, but the problems are always patterns. Like we get to see how people that are asset rich and cash poor, what we can see if they shifted one thing, like how everything would kind of work differently moving forward, right? That's what we're talking about.
Yeah, absolutely. I got another example here I can share.
Yeah, of course, of course. So, let's talk about the other opportunity.
So I've got another asset in Savannah, Georgia. I bought a waterfront property, and it's a big development, big one. The cool thing is it's a federal opportunity zone, so massive upside, right? I got to get through the project to benefit and hold it for 10 years. So it's got a very compelling upside. The problem is the clock is ticking. It's owner financed right now, but I have other projects that are in the works, projects that are delayed due to permitting and construction. And guess what? Everyone's in the market again. I don't have the same ability of being the only fish at this time.
Hmm.
So the question is, how am I going to see it through? Fortunately, I have options, right? I have an optionality. I own 6 of these policies that help weather those storms that actually start the process. So the issue typically isn't hey, whether or not this is a good deal. The question is, where does the cash come from? Because you can be asset rich and cash poor. Again, this is a true investor problem because things happen as an investor. If you have assets, renovations show up, unexpected expenses, tenants leave early. The question is, how do you respond to those?
Yeah.
Because you can be in a really strong position and still need access. Okay. You still need access from somewhere that doesn't force you to unwind something early. So, where do people typically go? The first answer to that question basically sets your structure. If the answer is, well, I'm going to go to answer this, Jeremy, I would actually go to my retirement accounts. Okay. So you just interrupted the compounding that's supposed to support you later in life. Well, I'm going to go to my brokerage accounts. All right. Well, what's the market doing? Are you selling at a loss to cover this? Hey, I'm going to go. I have money sitting in a high yield savings account. Okay. High
You're gonna
yield
interrupt.
savings are
Yeah.
they're variable interest rates. We're going to
Yep.
watch those drop. Those aren't set. Like, where are you going? Oh, I'm going to tap my home equity line of credit. So you're going to put your home and your family, the place, your shelter up for collateral to get through this seasonality. That's what you're going to do. These are true investor problems. Where you go first, what you taps first, talks about the vulnerability of your entire structure.
And here's a question, like Jeremy, that's an amazing share because you talked about the typical common ways where you go to get money. And you didn't talk about going to the bank and taking a loan too. That'd be another option that people would go for, right? Like they would go to try to finance more, and at some point, the bank's not going to give you more. Like
Yeah,
I
I
hear that
mean,
story all the time.
yeah, you can go to the bank, you can go to credit cards, right? Now you're looking at, 20% interest or whatever they're going to charge you. I
Yeah.
mean, the fact that I didn't bring it up is so far removed from my thoughts process. That's probably why.
But we've had the conversation so many times, and then you see it come back when it doesn't work, when change does happen, when you're doing the renovation, all of a sudden you think that it's going to be a minor repair, right, for walls or something. This is something else you shared with me on another project, and all of a sudden everything's dry rotted. Remember,
Yeah.
and everything has to be torn out.
Yeah, we had to tear off the back part of the house.
Yeah, I mean, so things are going to happen. It's the same thing. Change is going to happen. So, a reflection question for anyone driving, listening is, have you ever seen an opportunity and thought, I want this. This feels right, but the money is tied up right now. You don't have a way to access that liquidity.
Yeah. And so that kind of really goes into the other things, right? So how do you categorize these sort of pressures that you feel in life around money? Well, 3 ways that we do it is I put them in buckets. I call it urgency, emergency, and opportunity. What are these things? So simply put, an emergency is when something happens and there's really no choice. You have to handle it, right? That could be a major repair. That could be a health issue with your child or maybe your parent, okay? A family situation. Maybe it's a business problem. These are where the timeline is tight. That's an emergency. An urgency is still the timeline's tight, but not as tight, all right? The clock is shrinking. This is where you know like the refinance is coming due. Or if you took private money, hey, my period, the terms they're coming due, right? Hey, I've got a tax payment. I got a tax payment that's coming due. I've got a lender that's waiting. How about this one? I got a partner who wants out. Not because it's a bad, relationship. They just have personal things going on in their life. They
They
need
need
out,
liquidity. Yeah, they need
right?
liquidity.
So that's urgency, that's emergency. But guess what? Opportunity is the one that think people underestimate. An opportunity could be, hey, this property opens up. Someone's willing to sell it at a discount if I can move quickly. All right, I'll get a discount. The seller needs to move fast. We find opportunity there. Hey, this business can be acquired. I can 10x what it is that I'm doing. if I acquire this additional service and absorb it into my overall business?
Mm.
Hey, I got capital, I got people that I can take over. Hey, how about my deal? My deal needs capital today because here's an opportunity for marketing. I can 10x what it is that I'm doing. It's a different situation, but it's the same question. Where does the money come from first? Let me
Yes.
be caveat there. Where does it come from first?
Say it again. Yeah. First, Jeremy, I'm gonna throw a little curveball because I learned about this yesterday, and you know how I like to kind of tie things in. So I'm talking to someone that's an RVP for one of the big mutual carriers that supports the infinite banking concept and what we're talking about, privatizing banking. And he knows likes and like you like real estate. He knows, likes, and understands things that Connor would be excited about, magic cards and Pokemon cards. He found a guy, and I'm gonna make this really quick. He found a guy who wanted to sell him these cards for 70% of what they were worth. He turned around, took a policy loan, had the liquidity, and paid the guy 75%. And then in the next 5 minutes, he went to another guy, a buyer, who he knew would pay 90% of what the cards were worth. So he turned around and made $15,000 in 10 minutes because he had liquidity. That's the kind of opportunities we're talking about.
Yeah.
When that happens, you have money available. You can create more money and opportunities start flowing to you because you're no longer operating from a scarcity. Oh my God, how am I going to do this? Because you have that structure that removes the stress. Did I get it right?
Yep, structure before stress. That's it. But I mean,
Okay.
to your point though, what would happen, right? Typically, what ends up happening is someone's going to sit at their laptop and they're going to have the glow of the screen. All right, they're going to have all their accounts pulled up. They're going to have their phone nearby. They're going to be texting people. They're going to be looking at accounts. Who gets paid first? What can wait? What account gets touched for this urgency to emergency? Hey, from an outside perspective, like where can I get money from opportunity? Who am I calling?
Yeah.
You're the one that's on the call. They're the same type of pressure, but different categories. It's urgency, emergency, and opportunity. Okay. Inside of all of this, you're moving pieces, you're moving them around. The
You're
question
moving.
is, are you creating a new problem when you do so?
Yeah.
And here's the other follow up. When you're thinking about things like this, and that's consuming your life, guess what it does? It follows you home. It follows you into your conversations with your family. It follows you to dinner. It follows you to
Mm.
bed. It follows you when you wake up in the morning. When you're spending time with your kids, are you thinking about checking your accounts or checking your messages? When you're on vacation with your family, are you physically there, but are you present? All right.
Mm.
That's a hidden cost that we don't think about because
Oh,
it's more than just money now. It's your focus, it's your time, it's your attention. When you
Jeremy,
don't have
this.
a place to go to
Yeah.
first, that's what we're talking about.
Jeremy, this is making me uncomfortable. I don't know if anyone else is feeling uncomfortable in the moment, but this is something that becoming more and more aware of. You and I talk about it offline a lot, but it is this, we say things like, hey, people would die for the problems that we have, right? For the problems that we have. But what we're talking about right now is how do we become not disciple, a better, how do we attend to love, to peace, to being present, to being there to support our family, our loved ones, our neighbors, the people around us more is by removing stress, right? It's from operating from a different energy. It's from having a different flow. It's from being a better, I don't want to use disciple of Jesus, but like that's that book I mentioned to you earlier, the relentless elimination of hurry. And that's what you just brought up for me is when we're feeling tired and overwhelmed and stressed, it's often because of exactly what we're talking about here. Is when you start having to move stuff around, you start taking away from the things that are important in your life, you start having more mental load because of the moving pieces and the pressure that you've just created. That's what you're bringing up for me.
Yeah, because there's the cost, right? There's a cost of touching the accounts, right? Because you may have business cash that's set aside or selling an investment, boom, tax situation.
Yes.
You might be tapping line as a credit, but there's also the emotional cost, the time, the turmoil, right? That time that's lost. That's what we need to focus on. And if you go through the process with me, I really break things down into what I call write it, legalize it, fund it. So that's my process if you wanted to
Mm.
know. Write it is really get clear about your values and your priorities. If we start there, we can determine where money comes from first. The funded part, that's typically the last thing we talk about. It's actually in my opinion, it's important, but it's not the most important thing. Okay. So we got to figure out what's actually important up front.
Yeah.
Once we find that out, we can figure out everything that you're building, which typically people are building in pieces because they heard a good idea here or there, right? What I'm trying to do is actually protect your assets. I'm trying to make sure that it supports the plan. It does not compete with them. Your investments should remain your investments, right? Your living capital should remain your living capital. It's there to support everything that you're doing. And that's the funding layer behind this, right? The funding layer is a place to go so that it doesn't disturb everything else that you're building. It's already there. In plain English, okay, money is positioned ahead of time so it can move when life, when your business, when your family, when your opportunities, when those things require it. Its job, honestly, Jason, its job is to protect the bigger plan, right? It's protect the real estate from being sold too early. It's protect the business from getting drained, like business accounts. It's supposed to protect the private investments from actually getting erupted. It's also supposed to protect the time with your family, your loved ones, the ones that you care about. All right.
It's
It's not going
protecting
to
your vision.
replace.
It's
Yeah,
protecting your vision.
that's exactly what it does. It doesn't replace anything. It supports it. It supports and protects those assets. It protects what's important to you. You can be asset rich and cash poor. And again, that's going to follow you everywhere that you go.
Yeah. And you're bringing it back to the write it piece, right? Write it just means get clear.
Get
It's
clear.
like Simon Sinek, start with why. Not to send you somewhere else, but look that up some point and look in the golden circle. Start with the why. Start with the why first, and you'll know what to do. And that's all Jeremy and I are here to support everyone we talk to. We want to make sure that you're protecting your vision, what you want.
Yeah. Yeah. The living capital piece, it's there to protect the entire infrastructure. Like, so when life is happening, you have living capital there that shows up. Where does the money come from first?
Yeah.
And inside of what we build, like I said, we use a properly engineered life insurance structure. That's what we do because the cash value keeps growing, but it grows tax deferred and you can access it tax free. This is not an investment. Let me be very clear. We're not talking about investment strategies here. All right. What we're talking about is what sits between your saving and investing. What's the bridge between saving and your investments? This is not idle cash. I don't want your cash to get drained in a savings account. I don't want it to be lost to inflation. Okay. What we're talking about is more stable. It's actually more accessible. It has more jobs than just one single job. We talked about that in a previous episode. But how do you give your dollars multiple jobs? When you give them access, control, liquidity, protection, growth, that's what we're talking about. This is structure. This is structure before stress.
And that's the line for me today. That's my line I'm taking into the next few days. And again, we keep looking like my name, right? Keep it simple as simple. Keep it simple with Tio Jeremy here. We want to make sure that when you hear these things, how can you have more structure in your life so you have less stress?
That's it.
That
So
yeah,
net worth, kind of just wrapping things up here. Your net worth doesn't necessarily mean you have access. All right. Net worth does not equal access. And a strong investment can still become a forced decision if you don't have cash that's available. So asset rich doesn't mean that they have cash that's ready. So if you've heard this episode, I want you to think about your own assets. I want you to think about your business. I want you to think about your reserves. If you're not there yet, you're not there yet, to Jason's point, right? You're not there yet. Think about the assets you will have, the business that you're creating. Where does the cash actually come from if time showed up, if time went against you? Because guess what? Life doesn't happen on your calendar. We understand that. All right. If this means something to you, book a review. It's simple, it's easy. What we do is we explore this even deeper. We determine how this fits in your life. What structure do you already have in place? How does this support the overall plan, the pieces that you already have in place? If it makes sense to continue, guess what? Here's step number two. I'll just let you know what happens. It's a 15-minute questionnaire. That's it. Because we need the questionnaire completed so we can actually design something custom and unique to you. It's
yes.
individualized to your family, to your goals, to your priorities. No two designs are ever the same. There are people out there that say that they do what we do, and you get a cookie cutter answer. And life is not cookies, all right? You're not going to replicate
Oh
everything.
man, Jeremy, I love cookies. Are you sure life can't be cookies?
Life cannot be cookies, man. But if this does resonate with you, I want you to go to wealthwisebanking.com, schedule the call. Again, we're going to look at what it is that you're building. Where are you today? Where do you want to go? How do you want your money actually positioned? What actually gets disturbed first when life doesn't go according to plan? And whether your current structure actually gives you access or not. right? If this strategy makes sense, again, it's a 15-minute questionnaire after that. It's super simple. We make everything very easy for you to implement because when we started, this seemed overwhelming. This seemed hard. This is not hard when you work with people who understand how to build, how to use. And that would be the other thing I'd say. We actually implement, we practice what we preach. If you're looking for someone to use this and has assets, guess what? I have assets. I can help you. I can help you navigate so you don't make the same mistakes that I have. Learn from me, learn from the other people, learn from all the calls that Jason and I have had over the years. I mean, it's thousands of calls at this point.
Yeah.
There's a lot of wealth of wisdom that's inside of that. So go to wealthwisebanking.com. That's how you can get started.
And as always, Jeremy, you're already in banking.
You're just not the banker yet.
Be blessed. We'll see you the next episode. Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.